enemies, although he didn't know it. But now we're best of friends. So I guess it was fate. We're all always going to.
Well, it's funny because we always used to watch other people's stuff anyway, didn't we? And I used to see yours, and I used to be quite enamored with your material going out there as well. And we did a trading battle or something, didn't we, a few years ago? And
We
that's how we
did,
met.
yes. We did a few trading battles on 8cap. We're
Yeah.
running those, didn't we? Which was wonderful. They were like, "We'll give you money just to host." I was like, "Perfect."
Absolutely, and you were a good host. Yeah, so
Thank you. Yeah, I did better than I did on the battle. So it was good. We raised some money for charity on those. They were quite good, actually. We should still do those, although.
Yeah, well, it was good, quite good fun. Some good characters in there. I think we got Nick Leeson in once as well, didn't we? But
We did. I had you and Nick, so I just spoke for about 10 seconds. Anyway, people are paying homage to those tangents at the moment. Right, welcome everyone to this live stream. Thank you very much for joining us. Those of you who may know my background, I help run a company called Trade Room Plus with our founder Michael, then later James, one of our founders and owners of Funded Trading Plus for about 2013 all the way up to about 2022 when Funded Trading Plus started to explode. So I've always been very passionate about trading education, and I always thought we could bring it back if we could offer something different. And because we now have millions of trades, we now have hundreds of thousands of traders over many years, all different market conditions. We now have a lot of concrete data to sort of back up for traders. What are the best markets to trade? What's the best time frames? What day are people most successful? Every data point you could imagine. Obviously, we've filtered out all the things that aren't useful. We now have for traders. So I wanted to package that into a sort of education package and build a course and do some things like that about getting ahead of ourselves that enabled us to, in order to utilize that and weaponize that and allow to give something traders different from some 15-year-old rented Lamborghini Instagram poser. So I had to find the right person to do that. And that's why I approached Andrew. I've always admired Andrew's work when he's worked at the places, as I alluded to earlier. Always annoyed me when his videos did better than ours. And I learned a few things from Andrew as well. And most importantly, Andrew has that credibility of being an actual trader, as I'm sure he'll mention probably only about 30,000 times in the coming weeks, that he did trade on the actual pit floors. You see those old videos of people shouting open outcry, as it's called. Andrew was actually in those pits that he'll tell you more about. So he's legitimately the real deal, and he's come all the way through that sort of trading, all the way when it went through the electronic trading that we all know now, that happened, I guess, in the early noughties, late 90s, and continues to trade this day. So a genuine, real trader who spent his entire life, adult life, pretty much in the pits, trading on screens to deliver that education and give you insight that few people would be able to. So it's something we've been working on for a few months. We're not too far away from launching it, and we're just sort of testing the waters by doing some live streams and seeing what people like, what people feel valuable, and shaping it around that. I think that's a fair intro, Andrew.
I think so. I think that's very fair. Very flattering. Thanks very much indeed for all that. So yeah, I've been around for a good few years. There's a few people I know watching in now from my previous world as well, so they know the story and they will vouch for me. But yeah, I've basically started my trading career when I was 18, many years ago, straight out of the school into the trading pits. As Simon said, I'm going to be talking about it a hell of a lot over the next months and years, because it's basically what I've done. I eat, sleep, trade, everything. It's just always, for me, has always been the markets. And it's one of the reasons why I'm delighted now to be part of the FTP Plus community as well, so that hopefully I can share some of my knowledge and experience with the community members. I've seen, certainly I'm sure you have as well, Simon, over the years, there's many come into the trading fraternity trying to change their lives, getting drawn in by whatever reasons they get drawn into. And unfortunately, what I've seen, certainly over the years since I've been in the public area, is that so many traders or aspiring traders are failing. And we are trying to make a difference. Running obviously here, or being involved here with the FTP community, we have, I don't know the numbers, but I would say tens of thousands of traders data, and we see what's working, what's not working. So the idea of these sessions over the next few weeks and months, we're going to be doing regular sessions on a Monday, discussing the week ahead. That's what it's billed at. But over the regular sessions, we want to get people thinking like traders, thinking like the trader mentality, because ultimately we want people to succeed. Ultimately the more success we have, the more decent, consistently profitable traders we can find, ultimately, the more profit potential we all can make. For various avenues of doing that. So I'm super excited now to have the exposure to all the data that FTP Plus has to offer, and being in the markets for such a long time, I really think that we can add some value to it. We're going to be talking about everything, Simon. We're going to be talking about psychology, which, as you well know, is must be one of the biggest factors. We're going to drill that into the members so much that they stop, thinking like gamblers and think about markets like trading. We're going to be talking about strategies as well, different strategy approaches. There's no one strategy that's necessarily the holy grail. We're all out there looking for the holy grail. Strategy is not as important as a lot of people think, but of course it's important. You need to have a strategy. So we're going to be discussing that while doing this work, setting up the sort of education department, Simon. I was going through some of your material from your previous time and running your trading room, and the strategies aren't too dissimilar, to be honest, Simon. You're using the same type of, you're not relying on all these magical indicators. It's more sort of price action and support and resistance, just the basics. You need some defined rules, but as you know, it's not the most important thing. So we're going to discuss that as well, and hopefully you're going to have your input in there as well in time. So we're going to be discussing that. We'll be discussing mentality. We'll be discussing the metrics, which what makes people successful and what doesn't as well. So I'm really looking forward to hitting the ground running with you and the team here, Simon.
Yeah, absolutely. Yeah, no, I think there's also, to add to that, is the we interview a lot of our very successful traders, not necessarily just for putting them on YouTube and marketing purposes. Although people may have seen Raj recently, who's smashing his very large scale $800,000 account. But we do interview a lot of our successful prop traders as well, just to get that sort of things that isn't get the qualitative data, if I can say that word, that's not just the hard numbers and facts that we data that we have, just to ask them what they do, how do they fit it in their lives, because a lot of these people are working as well. To try and gather those sort of insights and then prioritize what they do psychologically as well. So it's not just a case of just hard numbers and data. And I think what's exciting over these next few years is, put politics aside, in terms of like what I think of him or whatever, but Trump is going to make for volatile markets, as he did in his last presidency. So and volatility means opportunity. So for example, cable's just been stomping up recently, which is one that I've had in my personal portfolio, as the pound's got stronger against the dollar, and that's because of Trump essentially wants a weak dollar. But so there's going to be plenty of volatility that goes across the world for reasons that aren't.
Traders love having a Trump around, don't they? I mean, he is basically. I mean, you can't say the markets are a dull time. I mean, no. And he's obviously inspiring that, and leading to that as well. So that's why we need to be kept, I think, on top of what's going on in the big world. I know you're like me. You're sort of more of a technical trader, yeah.
Price action was always my thing, really. I wasn't a massive fan of indicators, but it's whatever works for people. I mean, ultimately, indicators just taking data points from the OHLC of any candle anyway, apart from maybe volume. But so I was always I just like really basic support and resistance. I was actually looking at my old scalping course. But funny enough, the scalping course that I created to pass funded trading tests, when funded trading started to get some popularity back in, the late sort of 2020, when we started getting interested in it, when we launched Funded Trading Plus in 2021, people were coming to me saying, how can I pass these funded trading tests? So I developed a course around that. So I'm going to try and get that recut at some point, I think, with all our branding and things, and get that launched. But it's just interesting how it's come full circle in that way. But the techniques I was looking at back then still work today.
Absolutely.
Keeping it simple. Keeping it simple. He's off. Oh. Thought you were escaping. He's had enough.
No, I'm saying I was looking at you. As I say, I was looking at your scalping, and I thought, gosh, that's very similar. I thought maybe he has nicked it off me all those years ago, but it was very, very, very similar, and in that regard. But as I say, you need to have strategies. But trading technicals is the way I and the way you, I think, approach the markets. And having an overview of what's going on in the fundamentals, especially now with Trump and what have you, I think is really important. And it's one of the reasons why I like to do this sort of the week ahead session, which we're going to do at this time every week on a Monday. So it coincides with the US opening. I know the clocks have moved in the US this weekend. I'll catch up, I think, at the end of the month. But it's normally going to be at 1 p.m. London time, which is 8 a.m. New York time normally, but of course it's 9 a.m. New York time at the moment because of the clock differential. But we're going to basically be discussing, what is driving the markets. We'll always have a look back at what's been driving the markets over the last week or so, any data that was out last week. So we'll discuss a bit of that, and then we'll look at the main drivers for this week. And I think if you can get the fundamentals backing up with your technicals, that really does aim for an improved edge, and that's what it's all about. I don't think it's right for anyone just to rely on one or the other. I think having the sort of fundamental sort of backbone behind it is very, very important. And at the end of the day, we're traders. We've got to know what we're trading. I think that's quite important. So there's going to be education in these weekly streams, Simon. I intend to get to get to people, sort of understanding what they're actually doing as well. It's a chance for the community to basically reach out to me or whoever's on at the time. It's more likely to be me most of the time as head of education, but to reach out, ask questions. We know sitting there on your laptops or your phones, trading can be quite a lonely business, and that does in itself create issues because people trade out of boredom and they end up, just trading for the sake of it and what have you. So having someone here that you can sort of rely on and coach you through and discuss things with, I think is very, very important for the community. So I'm really excited about, helping out in that regard as well. So basically the chance for the community to it's like having a private mentor on your shoulder, throughout the trading week. We're going to be here helping you, guiding you along the way. And the benefit that we'll get from this, all of us will get from this, I think is going to be huge. But it does, again, rely on you guys as well. So don't be shy. Do get, Q&A-ing as well. And if you want to ask any questions, please do drop them in the chat. You can drop it in on the YouTube chat, which actually appears on my broadcasting software, or of course you can drop it straight into the Discord as well. We have got quite a few chats coming through at the moment. I see. Simon Strutter's in the house. Please do drop the chats in there, and we'll get through and get your questions answered, because that's basically what it's all about. Your exposure to real live professional traders. When I started doing this, I used to say I've been in the market for 30 years. I've now been doing this for 10 years. I've now been in the education space for 10 years. I've been around a long time, Simon. It's feeling it as well, I'll tell you.
Wisdom
comes with it.
Exactly.
Okay, so let's have a look. So drop your chats in. Lloyd's in here. Lloyd said, sounds great. DJ says, I like your FTP shirt. Thanks very much. We should get a merch site set up, Simon.
I mentioned that above. So I mentioned about the hoodie. We should probably get something. We could do that, I'm sure. Yeah,
we want to spread the brand. Yeah, get everyone wearing it on the weekends. And I don't know if I'm old. I think I'm a bit too old for hoodies, but I mean, but it looks good on you anyway.
Thank you. Yeah, no, we should do that, and then the first person we see in the wild of it gets a free account. But yeah, that'd be good.
Right. One thing I will say, if I can. I don't know. I think this is quite important. I just want to put this up for 2 secs. It is a disclaimer, and it basically says, like all disclaimers do, this is not investment advice. It's purely meant for education, entertainment purposes. Do seek independent financial advice if you are thinking about risking your own money on whatever we are saying. Remember, over the weeks and events we do, the live streams, I will be talking about maybe a bias that I might have in something. It doesn't mean it's going to go in accordance with my bias. It's purely my opinion. I'm sure you've all been listened to all the data in the past. $7 trillion goes through the currency exchanges every day. Who am I? What do I know? So don't trade just on what I say. You have to do your own analysis. So the disclaimer there is for obvious reasons. We're all grown ups here. I think that is a wise thing to say. Simon, have you got what I think I might do now is just go through a bit of where we are in the markets, and we can discuss it as well as it happens.
Yeah.
And then you can tell me if you think of anything you want to throw in there as well. Let me just get up the screen. I've got a bit of while since I've done this. So what I will do now is how do I do that with both our screens? Does that go down the side? There we go. That's must be a little bit better. Okay, so what's going on in the markets? I think is a big thing. You mentioned earlier about cable going up. It's basically, as far as I can see, it's a period of dollar weakness. And of course, Trump came in last week with all his tariffs and so forth. It's the case where now that the markets are really thinking about, are interest rates going to be cutting, falling, are interest rates rising? There's a whole bunch of things going on. Last week we had a non-farm payroll, which, as you know, is the biggest trading announcement in the calendar month. We're going to be streaming that live as well each and every month as well. First Friday of the month, so make sure you tune in for that. That came in line with expectations. It didn't really have a major impact in itself. But I think you'll see here the unemployment rate did tick up, which is most probably quite good for the central bank's view on cutting interest rates. But what was interesting, I think, last week after the FOMC is what Fed Chair Powell came out and said. He basically said that they're not going to be inclined to be cutting interest rates anytime soon. Now, the market hasn't really listened too much to him. If you look at the Fed Fund futures rate, they're still expecting 2 cuts by now and by the end of the year. But basically, the Trump administration, in my opinion, same as you were saying there a moment ago, I think is inclined to want to have that weaker dollar. Of course, it helps all exports and so forth. It basically helps with its tax cuts as well. So the Trump administration really, I think, is not going to be necessarily dollar supportive over the foreseeable future. Last week, we also had, by the way, interest rate decisions out of the Eurozone. Interest rates were left unchanged by the ECB. The euro against the dollar actually increased 4% last week, I should say, 4% in a week for a currency move, a big move. That with unchanged interest rates. So those were the two main drivers of last week, basically non-farm payroll, interest rate decisions out of the Eurozone, and the Trump tariffs, which are kicking in as well. Also, I saw over the weekend the Liberal leader, Carney, who used to be the Bank of England governor. He's just got the premiership now of Canada, which was interesting to see. Canada hasn't done very much, but it sounds as though their Canadian dollar, I should say, didn't do very much on the back of it. But interesting to see that he really seems to be fighting back against Trump. His words were pretty sort of stern to Trump, saying, we're going to fight you back. So that's going to be an interesting play, I think, over the coming weeks, how the Canadian dollar fares off against the US dollar. So I'll be keeping an eye on that. So with that, the stock markets, I'll tell you what I'm going to do. I'm going to show you up a little screen I put together of basically what happened. We'll do this every week as well. And I think this is going to be quite useful, because certainly if we're following trends, if you're a trend follower or counter trend trader, you want the markets to be moving. Trading is all about having an edge, and an edge basically in a trendy market is getting into an entity, an asset class that's actually moving. So what I'm going to do just at the beginning of the stream each week is going through what the main movers were from the previous week, and then you can compare them over the last month and of course the year as well. So this is like month on month and year on year. It shows you, look, the S&P 500. Are we in a bear market, Simon? What do you think? Is the S&P going to continue down? The stock's trading lower, obviously.
Well, it's interesting because I've had to make some. I'm not personally putting any more money into indices. I mean non-leveraged longer term investments, because I think would you a correction? I did say it a few weeks ago, easy to do in hindsight, but the problem is that there's companies, like Tesla and things that are just so heavily weighted that if they get hammered, it drags the S&P down. So I think if you look at it year to date, it's still at 15%. It's still rip roaring. But if you look at it on a longer term time frame, I think we are going to see some more downside and volatility. I just can't see us sustaining these ridiculous rallies and these valuations of some of these companies, like say Tesla, for example, that has always had a crazy valuation. But this time I think there's things to be concerned about. But I guess we'll just see what happens.
I'm the same. I've obviously trade my CFDs and my prop accounts and so forth, but also, trade my own, my own pension, my own sort of funds and so forth. I am actually weighted reasonably heavily in stocks, and of course, we're going to, I think, have this sort of drawdown period. Maybe someone was saying today on Bloomberg, maybe another 10% to the downside. Well, I'm not necessarily worried about that, because by the time I draw my pension, whenever that may be, in 10, 15, 20 years time or so, I'm not that old, we're going to be higher. But in the short term, there's going to be, I think, a bit of a retracement coming in these stocks. It's definitely what we call a risk off environment. 3.4% in a week, that's pretty big in a week, for a stock index. 3.7, what's that? 3.7 in the NASDAQ, which is the tech stocks that you mentioned.
Tariffs are going to be good for no one.
Absolutely, yeah. So why would you think about buying at the moment on a short term perspective? Long term, absolutely. Load your boots, as we trade lower. But in the short term, and I'm talking sort of like month, 6 months, is most probably is going to be a challenge. I would have thought. Interesting. Oil, that's another one. It's only down 3% last, or 4% last month, but I think oil could be an asset class that could come under pressure. Certainly, you're seeing a little bit of pullback in growth in China and Asia and the developing world. That's going to affect the price of commodities in general. Risk off generally affects commodity currencies and so forth, and commodities to the downside. So that's one I think to keep an eye on. What do you think about gold, Simon? I've got, again, this is just my personal view, and I'm not going to flash up disclaimer again, but take it with whatever you want. But I think gold. What do you think about gold? I mean, I think we've got some potential to move at the upside, but what do you think?
Yeah, I mean, gold. The traditional relationship with gold, isn't it, is when it's that safe haven, isn't it? Not so much defensive, but when equities go down, gold often is a bit of a safe haven, really. So yeah, I mean, gold's more resilient, isn't it? It's still up. So yeah, I thought gold will find a bit of a floor if the equities start falling down. Whether it will continue the crazy rally, I'm not sure. But yeah, I said it wouldn't be as long-term bearish on gold as I would be the indices.
Yeah, I mean, gold's up 31%. Gold's up 31% year to date. I mean, that's an amazing. I'm underweighted, but I do have a holding in gold in my ETFs. But a massive move. But there's various factors I think affecting gold at the moment. You've got obviously a weak dollar. A weak dollar priced in gold, it obviously means there's gold becomes cheaper, so that's why there's a flood in there. You've got central banks buying gold. You've got the domestic sort of interest in buying gold as well. The safe haven, wars going on all over the place. I don't, we're coming up to that 3,000 level. I think I haven't got the chart up at the moment, but it's coming up to around the 3,000 level. Whether that's going to hold it, I mean, if it does hold 3,000 and pops through 3,000, it's certainly a significant level that I think the markets will be playing with. And if you're following trends, if anyone here is following trends, it's important to get onto a trend that's moving. Anything here that you see is moving and over the month and over the year, well, that is a long-term trend. I think Raj, the guy that you interviewed that's on that 100K plus with us at the moment, he's a long-term trader, isn't he? He's not looking at the 1 minute chart.
Yeah, absolutely. He's looking more. So I've just got a gold chart up. That's all. I said.
Can you share your screen? You can.
Yeah, I can do. Let me have a look. See if we don't destroy the entire stream. Share screen. Entire screen. Okay, share. Did that work?
Yeah, I've got to switch you on. Here it goes.
Switch me on. Switch me on. There we go. Yeah, there we go. Wow, I've got some. Oh, this feels weird. We do offer trading view, don't we? It's our front end on.
We got trading view on the DX, yeah.
Yeah. So people do like trading view. I've just because I haven't got actually an active account on our prop at the moment, so it's I couldn't log into DX, but just using the default trading view chart. Yeah, I mean, this is the short term. I mean, this is the low from 2024, isn't it? And we've pulled back to that Fibonacci retracement here for anyone who's interested. I think this is no. I've been done by the free trial. This was well prepared. Yeah, but that's let me see if I can just scam it very quickly. Didn't think I'd be doing any technical analysis today. Just pulled that. I think it could be interesting down at this 36 point.
What is that level there? Yeah, that's my.
Yeah, I think around this sort of 2800 level, I think where we found resistance. I think if we got a pull back to there from a technical point of view, I think there might be some interest here at 2787 upwards up to sort of 800. Really, that looks like a level of interest to me on the daily time frame. And that's what I think I'd be interested in buying there if I was looking at the.
Well, that's right. I mean, that
trading
again. I
expert.
mean, as I said to you a moment ago about your strategy and my strategy. There's a few guys in the room here that have been following me in the past, and they will vouch. This is my trading strategy. This is I call it the boomerang strategy, and then we're going to discuss that again in the education area. But this is a typical classic setup where you pull back, boomerangs come back as they do, pulling back to an area of liquidity. That's clearly where where the big institutions were looking at before. There's definitely market activity at those levels. When markets pull back into these liquidity areas, they're either going to do they're definitely going to do something. They're either going to respect it or they're going to crash through it and burn. But very rarely do you see little.
I love what a serious charting package this is.
I'm pleased I've got you bringing
you can map all the highs and lows of trading, couldn't you? I mean, this is probably the experience for a lot of people.
Oh, great! I'm pleased I've got you on there to do the analysis.
High quality stuff as always. Yeah. Right, we'll go back to what we previously had on. But yeah, no, definitely get some jump on the charts and things like that when relevant, and have a look at some technical analysis. But yeah, gold for me 2800, just slightly below 2800. It's looking like an area of interest.
It will be. I mean,
if it goes through that, then it could well start heading towards those sort of November 2024 lows.
Yeah, I agree. I think the bias is lower. Is higher. But of course, at that level, if it was to break, then there will be institutional, I would say, interest. There are longs at that level. At some point, they will shift out, and that level will certainly be on the eyes of the larger players, I would have thought. Look at this. I mean, this was amazing as well. Euro dollar, I think I said that a second ago, 4.1%. This is really dollar. Well, ECB left their interest rates unchanged, but for the dollar, I mean, the dollar is now down 4% in a month. Yeah, that's basically since Trump was elected. Yeah, since he took power on the 20th of January, I guess it was, wasn't it? So the dollar is under sort of big pressure at the moment. Of course, interest rates, they are where they are at the moment. It doesn't look as though interest rates has any sort of upward pressure. So with the dollar run that you had over the last, say 3 or 4 years, that does certainly seem to have found its turning point, and the dollar is under pressure now. But I haven't seen the euro dollar, the main currency that most traders trade, of course, down 3.4% in a week. In a week where basically just Trump mentioned a couple of his tariffs. Bitcoin. Do you have any Bitcoin? I've got some Bitcoin in a.
No, I've got a sad story. But not a sad story of Bitcoin because I don't care about missing out on trades. But let me just have a look at. Let me just have a look at Bitcoin again. I'm just going to, because I was interested in Bitcoin a long time ago. Not a long time ago, but I think it was just when it was down in the late teens. Like I think I had an order in at 14,000 or 13,000, and it turned around. We have to go on a daily here, or even a monthly, but you need to go on a slightly longer term time frame here.
This is the daily, yeah.
Yeah, probably a monthly. We're talking years ago now. When I was looking at it. Yeah, just go on a month. Well, it peaked, it went down, didn't it? I think we'll see. There it is. Is it
down to
2022 or 2023 lows? No, even further back. Yeah, I think I had orders in at
16,400. There it was. You had.
I had an order at 15 or 14 or something like that, and then it just reversed and disappeared. So I don't chase the market. So it is what it is. I mean, I think interesting level on Bitcoin, I think, will be. What's that high? Yeah, just there. I reckon that'd be interesting. What's that? 71,000. Yeah, and then slightly below because you've got I think that'd be an interesting buy zone for me with Bitcoin now. If we're attributing standard classical support and resistance, support becoming resistance becoming support type price action behavior with Bitcoin, then I think that'd be an interesting area to buy. But yeah, I was interested all the way down there. I think I had 2 Bitcoins on order. It's about whatever it would have been, about $28,000, and it just didn't come and tag it in. I don't chase the markets. I mean, maybe I should have, but
had it tagged you in, would you have run it to 107 or
no chance. No, I'd have run it to the highs, the previous highs.
Yeah.
Where were they? I'd have run it to maybe 50, 60,000 at the most. I don't think I would have held it all the way up to.
I'd love to know the people up here that are selling. Where were they long? Are they long down here? Are people still holding from down here for an investment?
Yeah,
You hold something from 15, and you get, what do you get there on your risk to reward on that? I mean, you're looking at from there to where is it? Buying at 15. Stocks below. I mean, you're looking at sort of like a 10-to-1 risk to reward.
yeah,
I mean,
it's
to hold
crazy,
a 10-to-1 with serious money is hard, isn't it?
It's crazy. Yeah, it is. Exactly. It's crazy. So, no, I think, well, my trading plan was, I'd say trading plan, it was actual Bitcoin in the real crypto market. It was to, I think, buy in at, try and get in at 14 and sort of sell towards the previous highs of sort of 50, 60,000. But it never happened. It's one of those things. I mean, I have traditionally always bought Tesla down at 170. I don't know if you can get Tesla up there. I've always bought Tesla at 170. On this occasion, I don't think I'm going to do that. Yeah, stitched you up there, don't I? Yeah. So every time so if you draw a line at 170, I've always, for the past few years, I've always bought Tesla at 170. So you can see I've been in two times now, I think. But I sold a while ago. So I've always liked Tesla around that level, really. That's sort of where it rallied up to before it started going crazy and volatile. But
so, I
think this time I'm not so sure, to be honest. I'm not so sure if it's going to really rattle down because it's just getting absolutely destroyed at the moment.
3 days, mate. It's down 50%. I didn't realise that. Bloody hell.
It's wild, isn't it? You're still on a monthly, aren't you? But yeah, it's
monthly. I beg your pardon. Sorry, yeah.
But it's still insane. Yeah, I mean, there's there's a few red flags at Tesla, not least the owner. Oh well, not the owner, but the CEO, and then sales are down and things like that. I think Tesla. I think the tone is shifting on Tesla, becoming a bit more unpopular, aren't they? The cars don't seem quite as innovative as they once did. I mean, I do drive an electric, but it's far better than a Tesla in my view. I wouldn't touch a Tesla these days when the competition, the Germans especially, are just producing such high quality vehicles. It's like, do I want a Tesla or do I want a 5 or 7 Series, for example? It's a no-brainer to me. So people like me who traditionally be in the market for an electric car, without boring with a deal, because it's efficient to run one through the company in the UK, are not interested in Tesla because I don't like the owner and I don't think the cars are as good as they were. So I think it'd be interesting to see if the sales figures continue to have issues with Tesla.
Well, I think, I mean, I don't follow this stock too much, but I would assume that, the bulk of the sort of the move up from Tesla was because they were the pioneers and they were the ones you had this sort of, obviously the, Musk out there all the time. But now there's so much competition in the industry. And, it's not such a new thing these days. As you say, you got an electric car, a BM or something like that. They haven't got the edge that they used to have. So
they made electric cars cool. That was the brilliance of Tesla. They made electric cars cool, but the issue you've got, about trying to turn things political is it tends to stereotypically be the more liberal side of the US that does buy them, the Californians and things like that. And obviously, Elon is very much committed to the right in America, the conservatives. So I think he's going to struggle with taking that very, very heavy political stance to sell his cars in America. The people are selling them, and there's people putting bus stop ads and putting stickers on the cars and all that stuff because of his certain behavior when he's doing a public speaking. So I'd be concerned as a Tesla shareholder. I'm not a Tesla shareholder.
I would be as well. Just technically, for me, technically, I think your stops maybe above sort of that sort of the gap zone. I would be looking at. I mean, I think you might be getting some more stock at 170 at some point.
I'm not sure I'd even buy there with the current weakness. I mean, it's underperforming the indices significantly. So if the indices really start hitting down, it could really, really fall. But I'd definitely be interested at a level just from a purely technical, trying to make money point of view. Without I don't just filter out investments because I don't like the CEO or anything like that unless it's going to affect the share price. But no, there'd definitely be a level I'd be interested in. But 170, I don't think I'd be as keen to get into. Graham, you always like to talk BMW. Yes, I think you are. You sort of lean towards your German brand, your Audi, BMW, or Mercedes. I've got 2 BMWs, so I do like those. Got an old classic one. Like you've got an old classic one.
I have, yeah.
You bought one for a good trade, didn't you, back in the day?
No. That was a company car back in the day. I did get given to me another car for another reason, but maybe we'll talk about that another time. But my BM is I bought it in 1990 when I was in the city. Well, it's a company car, I beg your pardon, and then I bought it off the company and I left that particular company. But I still have it. It's an E30 convertible, and it's on some of my YouTube videos, which some people would have seen. But it's done 28,000 miles, Simon. I mean, it's going up in value. I mean, it's not going down.
No doubt. Oh man, it didn't take long to talk about cars, did it?
No.
But yeah, no, the E30 is a beautiful classic car.
Yeah.
But yeah, so Tesla not interested at the moment until it starts getting further down. Really, that's pretty much it. I mean, I do like index trackers as well. Like I bought the Nasdaq, the Quad Q, is it QQQQ, the ETF, which
triple Qs,
yeah, 3Qs. Sorry, it's
triple Qs. Yeah.
I've had that Investec, isn't it? One I've had that a few times when the Nasdaq's been going down. So there are things I'm interested in, but I like, I'm happy to sit on the sidelines and wait for value on the longer term. Obviously, shorter term, I bought a pound what's it called? Something tree ETF, which tracks pound strength. So that's done. I've tried to close that today, but the market makers are trying to give me a terrible fill, so I'm struggling with that one. Yeah. I've just had to email my broker to say what's going on. They're trying to skim just far too much off it. I guess all the volume's probably long. So anyway.
Yeah.
The joys of trading real things rather than synthetic and derivatives.
Trump said XRP Solar it would become the coins in reserve, but then he backpedaled it. Yeah, that's why. I think the Bitcoin's on its way back again. He's trying to get himself involved in that, isn't he?
Yeah. Well, it'll be interesting to see how well the checks and balances work in the US to keep Trump doing or saying some of his wild things, really. Because he's getting more outrageous, isn't he?
He doesn't put a disclaimer when he does his press conferences, does he?
Yeah, but he's like Teflon, isn't he? It doesn't matter.
I agree. So yeah, I mean, those are the markets we're looking at. Really, trend followers should get on something that's really trending, and you've got the fundamentals. You talk about the fundamentals there, and you talk about the technicals here. Tesla's got to be a sell. Gold's got to be a buy. So what I'm going to do now is I'm going to basically talk about the. Where we go. Talk about the week ahead and what's going to come out this week, Simon, very briefly, because the stream is billed the week ahead. So just for those that are coming on, looking for the main sort of drivers that they should be aware of, I just want to skim through this. I said we'll try and keep it to 45 minutes to stream anyway. So, but basically nothing much out today. The JOLTS numbers is out tomorrow at 2 p.m. Okay. So the way that a lot of traders, central banks look at interest rates, and basically interest rates drive all the currencies. That's basically what the main sort of focus is for currency traders. What's happening to interest rates, and one of the big factors that affects interest rates, as we know, are job numbers. We had non-farm payroll last week. The JOLTS number is a number that doesn't really get talked about too much, I don't think, by the analysts and what have you. But it's a number that I've been following for many years. It's basically job openings, because the non-farm payroll tells you how many people were employed that last month, how many people joined the workforce. But the JOLTS numbers tells you about the number of openings. Companies, they create more jobs if they're optimistic about the future. So I think this is almost sort of like a leading indicator for the non-farm payroll. So this is going to be out tomorrow at 2 p.m. London time, which of course is 10 a.m. 2 p.m. London time. I beg your pardon, that's 2 p.m. New York. I beg your pardon, it's 2 p.m. London time, isn't it? That's right, yeah. Which of course is 10 a.m. New York time. They're going for 7.71, which is slightly up from last month. So keep an eye on that. If these numbers come in higher, you generally see the dollar being supportive. So a high number generally supports the US dollar. Doesn't always happen, but that's what you could expect to happen. Normally when this happens, 2 o'clock, you will see some activity in the US dollar. Don't necessarily trade 2 minutes before the JOLTS numbers. If you've got really tight stops on a scalping account, I think that is something that you should be aware of. So that's really Tuesday. Wednesday is when it really sort of kicks off in terms of the data for this week. Okay, so we've got CPI out on at 12:30, normally 1:30, but because the clocks change, it comes out at 12:30. Consumer Price Index. It's basically the inflation number that we all look at. It basically tells you what prices did from the month prior. The year-on-year figure is what they look at. So the analysts are expecting inflation to drop down to 2.9%. Central banks have got a mandate to keep inflation at 2%. So if inflation is still persistent and the tariffs that Trump is putting in certainly has upward pressure on inflation, that basically means interest rates are more likely to stay higher for longer, therefore dollar supportive. So high numbers, anything higher than 3% Wednesday, you could expect to see the dollar affected to the upside. So keep an eye on that one. That's the main sort of event on Wednesday. The Federal Bank of the US, FOMC, they actually look at personal consumption expenditure more so than the CPI, but nonetheless, traders do look at that one. So again, if you're scalping, if you're on the lower time frame charts, be on your guard for Wednesday at 10:30 US time to 12:30 lunchtime here. Bank of Canada rate decision. They're expected to cut interest rates this time around. I think they will cut interest rates. Obviously, with the new PM and the tariffs coming in, they need to support their economy. Their economy is going to be really tested over the next 3 to 6 months. I would have thought interest rates are likely to come down. If they don't cut their interest rates, you can expect to see the loonie, Canadian dollar, trade stronger. But it's pretty much, I think, priced in that the Bank of Canada will cut interest rates on Wednesday. And of course, the press conference is always the most important factor, because that gives you like the forward guidance on the Wednesday. Not really much out for the rest of the week. We've got producer prices on Thursday. That's basically what the manufacturers have to pay for their raw materials. And of course, if those prices are going up, they've got to put those prices on to the customer. That means inflation goes up. So we keep an eye on the PPI as well. So it's quite an inflation sort of centric week this week, with PPI and CPI are all coming out as well. And with all these, you need to look at the impacts, of course, on 10-year yields. And unemployment claims come out. That comes out every week on the Thursday. I don't think the markets pay too much attention to it these days, but nonetheless, it is marked as a red flag on all the economic calendars. Means that the markets should be certainly aware of them. We allow traders to trade over news announcements, don't we, Simon?
Absolutely.
Yeah. So some props don't allow news events because they believe it's.
I mean, we expect people just to manage the risk on news events. We try and trust traders to make their own decisions. I mean, if we get people who are going like full send, 2 minutes before NFP and expect to close after, it's like, no, that, it's come on. But it's just, I mean, if you swing trading and you want to take into account news, we don't do this. You must, all this nonsense. We just want to trust people and give them risk guidance, really, and put as few restrictions on them as possible, rather than outright banning anything.
Yeah, exactly. We want to create,
as long as people manage the risk and they're sensible and they're thinking of a long-term view, it's like, if you're going to risk blowing your account in 1 or 2 trades, it's probably not a professional approach to trade. I can't do anything with that data, or it's just going to end up in a cycle of blowing up accounts, buying valuations, not helpful. Anyway, so go on.
I totally get that. I mean, that's totally right as well. It's the right thing to do. You want to make sure that people, as we said at the beginning of the stream, I mean, we want people to start thinking like a professional trader. When I was in the trading pits, many years ago, we would have to normally get clear before the news event. We don't want, we didn't want to go in because it's a flick of a coin, quite frankly. I personally wouldn't want traders just going in gambling on the news event. If of course you've got a position on and it's a long-term position, absolutely fine. But gambling on a news event, 50-50, it's not something that I think traders should be doing if they want to have a sustainable sort of income out of the markets. So we don't ban it. We trust people to use their own, guidance and risk management to make sure that it's controlled. But it's great that we don't actually, stop it. I know some pot firms do. There you go. So Thursday, what else we got? Thursday. Oh no, Friday's the day. Friday we got UK GDP. That's gross domestic product. It's month on month. Not the biggest event of the UK in the month. There's normally the quarter-on-quarter ones, which are more important. Month on month, we do look at it, but it's not so. Significant. It looks as though that GDP is going to take a drop this month from last month. It's basically the health of the economy. It looks as though that the pound could come under pressure if that comes in line or indeed lower than expected. We got German CPI out as well. That's pretty much unchanged. I think it's a non-event. We had ECB last week. Interest rates were left unchanged. Forward guidance was data dependent. I don't think this is going to be that significant. And then we got the prelim consumer sentiment on Friday afternoon. I quite like the consumer sentiment indicators because it does give sort of like a forward-looking view as opposed to what's happened in the past, like the CPIs and retail sales. That's all lagging data. It's always happened last month. The PCS is like a forward-looking indicator of what we what the consumers are thinking. So we do like that. Okay, so that's basically the week ahead stream. I will so leave that data there. We did have a quick look at the charts. The bias for me at the moment is to keep on looking at this gold market. Gold market is looking particularly strong for me. Where's my old gold? Here it is up here. Oh, tell you what I do want to mention, just on the currencies, something I always talk about, and I've been talking about this pretty much since I came onto the trading screens in 2015, really. It's my momentum meter. You can get it free on TradingView. Just type in momentum meter and it will come up. So I'm not selling anything here, but it basically tells me which currencies are strong and which currencies are weak. So if you're looking at the week ahead and you're looking at what you should be trading for, the next 5 days, seeing what's happening from a sort of like a top-down view, I think does give you an edge in the markets. Now, I'm not saying there's 8 currencies here and you've cross-matched those, you've got 28 different currency pairs. If you're a trend follower, then clearly it makes sense to buy a currency that's trending up and sell a currency that's trending low, trending down. Okay, the beauty of trading the forex market is that it's two-dimensional. You can buy one and sell another one against it. This here basically gives sort of a top-down view of it at the moment. The purple line is the Canadian dollar. Canadian dollar at the moment is weak. This is on the 4-hour chart. The Canadian dollar is weak, and we're seeing some strength coming into, well, the Swiss franc and the Japanese yen. So that shows me at this moment in time, if I am going to be trading on the lower time frame charts, maybe I should be looking at the CAD yen. And then I will go to my trading screens and pull up a CAD yen trade, a CAD yen screen, and see if indeed there is any sort of potential opportunities going on. This is how I'll do my trading analysis normally on the weekend before I start the trading week, but basically get to my plan, my sort of playbook sorted out. So this is daily. You can see that's just reflected there on the momentum meter. You can see this currency is under big pressure. So this has now got my eyes of focus, my eyes of interest, and then I'll look to see if any of my trading strategy rules will apply. I trade the boomerang, so I'll be looking to sell this, especially now. Obviously, we've got this low back here from August 24, but we've broken a structural low here, and I think this level, now that we've broken, obviously old support acts as resistance. If it bounces back up, I would expect to see some more buying coming in here, or the sellers basically running out of steam. That would be my bias. I would go down now to the lower time frame charts and look for my entries on the boomerang pullback or something like that. But the bias, I'm only selling this currency now. I would not be buying this currency. It's got a CAD weakness, a yen strength, two currencies in play. That has got a better edge than trading the pound against the euro, which at the moment are currencies that are moving in line with each other. There's no edge in that. If you're a trend follower, you want to give yourself an edge. And that, I think, is a way to give yourself a bit of an edge in the markets just by looking at the top-down view of which is strong against which is weak. This is only against the 8 main currencies. I haven't had it programmed for the other ones, but I'm sure these day and age you can get it coded up yourself on ChatGPT or whatever it is, or Horizon, getting up your indicators coded up and what have you. But that's basically what I would be looking at. A quick look at gold before I go, because I know we did speak about it a second ago, but I do think this has got some interest for me. Just go to commodities, gold, here we go. So yeah, so you mentioned basically back down at this zone, potential 2,800, around that zone at the moment. Trend is definitely up. We've had 3 days of negative price action. Lower time frame chart, consolidation around this zone. Okay, so this is basically your resistance zone, isn't it? So this is your resistance zone. This will be your support zone. I would be, well, I'm not trading this. I don't trade this as a trend. Intraday charts. This to me is just whipsaw territory. That I'd keep out of that. Longer term view, I'd be looking to take it long on the high time frame charts. But at the moment, I'm talking myself out of the trade. I would basically be keeping my powder dry on that. So Simon, that is run over a time a little bit. It's great to be on. I'm looking forward to getting involved in these week ahead streams, non-farm payroll streams as well. So thanks for having me on. Let's see if there's any chat in the room that Pips A's in the house. I've got a few of the old followers in here now as well, so good to see you all here. Most accounts issued within 48 business hours. By the way, I'll just put this up. We're obviously running a this is not meant to be a sales pitch, but there is a 15% code going through at the moment, which you can see from the site. What's this code? 15XPER, and that gives you 15% off the challenges. And there's all different types of challenges there. You can check that out as well. So I thought I'd drop that up there as well. It's off the 12.5, 25, and the 50 experienced program traders. So do go and check those out. So Simon, do you have anything else that you'd like to add? Any more?
I didn't realise I wasn't muted there. My keyboard's probably horrendously loud. Sorry to everyone. Trying to multitask, which is not my strong suit. Not particularly. No. Like I say, we're going to keep these more concise and focused. Just as it's been the first one, but we're looking forward to continuing to do some live streams and get our education section sort of launched and go from there. Really, I'm excited about it.
Yeah, I'm looking forward to it as well. Getting the community interacting and so forth. I mean, ultimately, we all know that trading can be a lonely business. Now this is going to be a chance where you can jump on these streams, chat to us all, share ideas, and chew the fat. So it's definitely going to be every Monday. We're going to do the ad hoc events, the big news events, non-farm payroll, and FOMCs as and when. So make sure you're always here in the Discord, making sure that you can, of course, get it in your diary for when we are going live. I think I have. There's some people listening on YouTube. So let me just see if I can put up the link to the Discord. I think are people. That's not going to work. No. So where is it? I think that is a Discord link as well. It should drop there in the chat as well. Let's have a look here. Just put up a QR code. No, that takes you to the. Okay, so that link there basically links you to the Discord. So if you're not listening in on Discord at the moment, scan that, join the Discord. That's where you'll be kept up to speed on when we're going to be going live as well. These are not sales pitches. This is purely meant for entertainment and education. If you're not in it, then of course you won't be able to take part. So get yourself involved, and I look forward to seeing you on the next one. Okay, Simon, thanks for that.
Cheers. See you later, guys. Goodbye.
Catch you later.
Bye-bye.